Welcome to this weekly macro and strategy update. The US election, the planned fiscal stimulus and its impacts on financial markets are the major current topics. Democrat candidate Joe Biden has a high probability to win the upcoming presidential elections. He is leading in national polls, but also in at least 5 of the 8 swing states with a comfortable margin. Democrats are also more likely to win the Senate. A Democratic sweep would not necessarily be adverse for equity markets, quite the contrary. Of course, the Biden administration's plan to raise corporate taxes would weigh on EPS. However, this would be offset by the positive effect from a more predictable foreign policy, even though frictions between China and the US could stay over the medium term. Importantly, the substantial fiscal spending planned by Biden would provide a strong boost to US growth in the short term. Indeed, Biden administration plans to spend an additional $5 trillion in infrastructure, housing, education and healthcare over the next 10 years. This is why we maintain our cyclical bias towards solid industrial companies and focus on companies exposed to infrastructure investments. We also remain overweight on companies exposed to energy transition, likely to benefit from Biden's ambitious climate plan. Finally, we are expecting a rise in US Treasury yields and the yield curve steepening in case of Biden's victory, triggered by fiscal stimulus and economic recovery. But this movement will only be modest, as inflation expectations will remain contained and because the Fed will continue its aggressive balance sheet expansion. Thank you for listening and see you next week.